Andrew Holland is our market master this morning. Actually, I think we do have him now. So let's straight away get to the conversation then. Andrew, hi, good morning. Season's greetings to you. Wish you a very happy 2025. Now, it's not been a very happy start to 2025 for Indian equity investors, right? They're keeping the faith. They're, continuing with their SIPs and their mutual fund inflows. But this foreign selling has been really difficult, and it's showing no signs of stabilizing. What do you make of it?
Well, I think we spoke about this before the new year, actually, in terms of I think foreign portfolio investors are going to wait now to see what President-elect Trump does. In that respect, you've seen the dollar rising, bond yields rising in the US. So therefore, there's no real need to kind of jump into emerging markets until you can see clearly what these policies might be. I think you're kind of in that kind of, is it going to be more shock and awe in terms of what Trump does, or is it going to be more tempered in terms of the kind of the policies and tariffs that is being rumored to be implemented? So I think a lot of people are just sitting on the sidelines saying, if there's any market rally or there's any kind of risk which is being played through the currency markets, then if you feel that the earnings season is not going to be so good, the budget might not come to the rescue, then valuations remain quite high. So I would have thought that's just an easy risk off the table kind of trade, which foreign investors are making at the moment.
Oh, okay, all right. So that remains a risk, Andrew. We take that point. But then the other issue is this debate about a slowdown here in India and earnings, right? What do you make of this? And actually, let's start with IT, because that's the silver lining that we've got. TCS sounding pretty optimistic in the last 12 hours when our colleagues did the interview. Can IT be a bit of a pillar for this market?
Yeah, it can be. Listen, when markets fall, the safe havens are usually FMCG, IT, and pharma, and that's probably what we've been seeing more recently as well. So the TCS results were below expectations, I think, for most analysts. But the commentary was strong, as you mentioned, or positive. But that doesn't mean that the whole IT sector is out of the woods. But obviously, they have tailwinds in terms of the currency at the moment. So that will probably keep the positive kind of views on the sector. As regards the economy, we've been the RBI is still too high in its forecast. I think GDP is probably trending more towards 6%, and that means that earnings have to be downgraded. And I think that's what the market's trying to adjust to is lower earnings. Not just for this year, but expectations going into 2025-26, where we're thinking that EPS growth will be maybe between 5 to 10%, but let's say 10% more optimistically. So therefore, the index could rise along those kind of lines in 25-26. But all of this is irrespective of what we're thinking regarding Trump. But when Trump comes in, all of this could change, and I think that's what the market will have to grapple with. Not just our markets, but global markets as well. So sitting on the sidelines having cash, I think is a good strategy just for the very short term.
Okay, sit on cash. Cash could be a position in this sort of uncertain times. Hi, Andrew. Good morning. Good to see you in. What about the Indian markets? When you joined us last time around, you said at these valuations, at these levels, you're not very, very excited. And the US market's the main game in town, with Trump taking over. We are a little bit lower in comparison to what we spoke, when we were in November itself. I think we're around 5 to 6% lower in comparison to those levels. How much lower for you to get excited on the Indian markets?
So I think if the market was to fall another, say, between 3 to 5%, I think valuations will start to become a little bit more compelling. Listen, we'll get into oversold territory. We probably are in the bank index at the moment, and you could see bounces. But if your expectations are that forecasts are going to have to be lowered as this quarter unfolds, then 3 to 5% is probably what I'd be expecting anyway in earnings revisions. So that would be in line with the market fall as well. So at those levels, I'd be a little bit more optimistic. But there's no real catalyst, right? Unless the government starts spending money, which it doesn't seem to be, opening its purses at the moment, then there's no kind of multiplier effect going into 25, 26 for the economy. And therefore, you're seeing a lot of more negative reports about either a K-like kind of recovery and consumption, or big slowdown in capex. So all of these factors, I think, are just playing into the negative views where valuations don't support you.
Yeah, no, absolutely. Point taken. I'm just looking for anything which is moving in a meaningful way. So yeah, I mean, it's all actually the leaderboard with volumes is all dominated by IT services, TCS, Infi, LTI, Mindtree, Coforge, Wipro, Persistent, Tech Mahindra, and so on and so forth. Keynes is making a bit of a move higher, 1.5 higher. And then there is something like an Amber, which is up about 1.25% as well. Can't see Dixon anywhere, at least not with volumes at this point in time. Andrew, hi, morning. The entire renewables space, if I've spoken, I don't know if you've spoken about it before, or if you have a view. Solar especially. Now you've got more than a few listed players out there. Anything you own? Do you have a view out there?
No, not really. I think, in terms of the whole kind of renewable sector and power in particular, we know expenditure is going to be there. So we know it's a long-term play. But, I don't think there's any real catalyst, again, for these shares to move higher. I think it's going to be a little bit more competitive in the short term. So staying away. I think what we're trying to think about, Prashant, is where will currencies and where will bond yields go in the short term? Because that, I think, will give us a good idea of what global markets might be facing in the kind of first quarter of this year once President-elect Trump takes over. So I think that will give us a good clue of where foreign investors will also be will they be coming back or not? So, for example, if, say, the China tariffs were not 50%, but 30%, I think that would be good for emerging market sentiment. And if China was to throw in some stimulus as well, then again, flows would start coming towards emerging markets. So these kind of things that you have to watch out for. At the moment, the dollar index is telling me that's not going to be the case. But as I said, it could be a more tempered approach by President-elect Trump than the market is anticipating at the moment. That's why I'm saying I think just wait till after the 20th. I think we'll get some clarity on what his proposals will be. And as we've probably seen in the last few days, they can include countries as well as tariffs.
Absolutely. We don't know Greenland, Canada, tariffs, who knows what's coming. And the 20th of January is just the start, we must remember, right? It doesn't end. There's no crystal clarity by the night of the 20th of January. We're on a roller coaster here. And Andrew, we will look forward to having you back with us on the roller coaster in the coming weeks as well. Thanks very much for joining in. Have a good Friday. Okay. Well,